Please welcome Mike Ogilvie.
I was very honoured when Jeremy asked me to speak and said, what are you going to talk about? And I said, well, there's so much I want to speak about. I want to talk about how, as Dave Thomas said, it's all about you. You know, the success is all about you. I want to talk about how you're setting stratospheric goals, how fast you want to fly. I want to talk about how unrealistic people are, speakers, businesses, in terms of setting their goals. And he said, no, Mike. I said, but no, I want to talk about how so many people, so many businesses are adrenaline junkies. They're windsurfers of life. They have no direction. They're like this little duck that's got no oars. It's got no rudder. It's got no brakes. They're just going where the wind takes it. But he says, no, Mike. But I said, I do. I want to be able to show how there's still hope when you go over the Zambezi factor. You know, you're going to need a hero like people do in business. They hope that Super Mike will be able to come to the rescue. No, Mike, we want something far more down to earth. We want you to be an accountant. Graham Davis comes in today and he says, Mike, lovely to see you. You look like an accountant. I'm an interesting accountant. I said, Graham, today I am an accountant. I'm going to share the tips that I give to businesses, to fellow speakers, and just try and put it into some sort of context. People ask me, what should I be? Of course I should be a company. Should you? What is the right structure you should have in your business? Should you be a company? Should you be a sole trader? Should be a partnership? And I speak to people and they don't know. They've done what they thought was right. So many people are limited companies when they don't need to be. They just don't earn enough. First golden rules. When you start in business, you're most likely to be making a loss when you start in business. That is the time when you need to be a sole trader. That is the time when you want to employ a spouse or a family member to make your loss bigger. Because what happens when you're a sole trader, you can use that loss and set it off in the last 3 years and get some of the tax that you've paid back when you were an employee. But if you're a company, you have to carry it forward. And nobody can look at your figures. So if you're a company, you have to publish your figures in Company House. But when you're a sole trader or partnership, nobody can see your figures. So perhaps in the first year, the one golden rule is always be a sole trader, because you're going to have PI cover if you talk about anything contentious. You're not going to be putting anybody at risk. But let me introduce another idea. If you have got anything which might put people at risk, have a limited company and also have a sole trader. Perhaps that might be relevant for VAT purposes. Should you be VAT registered? Of course you should. Should you go into a flat rate in the first year? Of course you shouldn't. In your first year, you never go into flat rate. Because in the first year, it's going to be the time when you're going to be buying most, when you're going to need to claim back the VAT. And if you've got some customers, I had somebody came to me and said, but I've got everybody, my customers don't claim back their VAT. That's tough for them, isn't it? So what? Is that 20% really going to matter that much? Is your business going to be affected so badly that you have to charge, that you're worried about charging the VAT? If that's the case, have one business that's not VAT registered and have another business, like a limited company that's separate from you, that is VAT registered. So, for example, if you do mainly coaching and you do a bit of speaking, I would say have your coaching as your non-VAT registered, your bit of speaking VAT registered, because they're going to be your corporate customers, your bigger customers, who are not going to be worried about paying VAT. But just take advice. It is possible to have two separate businesses. Do not worry about the accountancy fees. I would say that, wouldn't I? It is, if you are worried about the accountancy fees, you've got the wrong business. You're in the wrong business. So think about the structure in terms of whether you should have a partnership, because sometimes people go into limited companies when they don't need to, where they can actually share their profits with members of their family. And that's perfectly legitimate. Nobody can see your figures. Don't make it easy for people to see how unsuccessful you are. Don't go and pay tax needlessly. Don't worry about it. You build up. You're not expected to start running fast immediately. A business success is a gradual phenomenon. You build up to it and you transfer. And if you want to, although some of the rules about selling goodwill have changed, it is still possible to sell goodwill and pay capital gains tax instead of at 10%, at 18%. It is still better than paying at 20% or at higher rate if you're starting to earn that money. We've only got too short a time together for me to go into too much detail. But the structure of your business is so important. And I listen to people telling me, well, they're a limited company. Without thinking about it, they're wasting money. They're giving away money to the government needlessly. So VAT registration is really important. Now, flat rate or not, year 2, by all means, if you've done all your purchases, all your computers, all your costs, setting up your studios, whatever you're doing in your business, you would have claimed it back. Then go to flat rate. Now, depending on what your business, you're going to be able to have a flat rate scheme, which effectively you're paying 12.5%, or if you're predominantly management consulting, 14.5%. So depending on what you are, it's probably going to be 12.5%. And that's nice and easy. So you don't claim back your VAT on all your costs, you just pay over a flat figure of 12.5%. Nice, neat and tidy. But not in your first year. So it's easy to do. Once you're too successful, you have to come out of it. But you have to be earning, you can't do it if you're earning more than 150,000. Okay, so you hear a lot of people say, I wouldn't get out of bed for that, but we're great at boasting about what we don't earn. So most people I know in this room are not earning 150,000. I know a few are, but a lot of people aren't. They're just hoping to. So flat rate actually works for you. So just think about VAT. You should always be registered. If you're not registered, what does it say to your customers who are looking for you and you don't charge VAT? I'm far too small. I'm an amateur. I'm playing at it. They're not going to be worried. They expect you to be a professional speaker. They're not expecting you to be an amateur. So please, VAT register. And if you have got some small coaching clients, have a separate small business that maybe is a partnership, that's a separate vehicle that isn't VAT registered, but it has to be distinguishable. So if it is ever challenged, you hear about pubs with their restaurants as a separate business. That doesn't work. They actually, the revenue are up to that, and so they'll say, effectively, it's the same business. You can't have a pub and say, oh, my restaurant is a separate business and I'll not VAT register that, or I'll VAT register that and not that side. So just think about it, make sure it's distinguishable. Really important. All the other tax issues. So should you pay dividends or should you pay salary? The new rules, Boy George has gone. The Chancellor of the Exchequer, the arrogant, sorry, Graham, I know he might have been one of your clients, but you might have taught him to speak well, but it didn't stop him being arrogant. Boy George has been sacked. So he is the one who's attacked landlords, who has attacked so many supporters of the Conservative Party, and is attacking business people and taxing them like as though he was a member of another party. So, sorry, political comment over. So where dividends were great, but now this year, you're allowed to have 5,000 dividends tax-free. But anything above that, 7.5% surcharge. It is still just, you're still just better off being a company than being a sole trader for tax purposes. So what the answer is to try and make sure that you can actually get the best of both. So you maximise your dividends, take your 5,000, you can lend money to your business and get interest of 1,000 tax-free. So get advice from your accountant to make sure you maximise your tax-free elements. And any other dividends beyond that are going to attract the 7.5% surcharge. So if you imagine, if you had another business running alongside a limited company, and you were to put charges across, the benefit of a limited company is you can have other shareholders in there, like spouses and other family members. So if you are supporting a son or daughter at university, wouldn't it be great if they were shareholders when you started your company? Because I'm sure they would benefit from having their 5,000 dividends tax-free. A benefit of a company is the fact that you can share your profits with other members of your family. Very, very useful. But if you don't need that, and if you're drawing all your money you make out for yourself, there's no need for a limited company. You're taking extra costs on unnecessarily. So take advice from your accountant and be careful about why you're going to limited companies. You do not need the limited liability. If you are saying anything contentious, have some insurance. If you are saying something contentious, then have a limited company, but it's really probably unnecessary. Should you pay your family? Can you pay your kids? Yes, you can. Kids are the best at doing research on the internet. There is nobody faster. Why can't you pay them? So as speakers, we need an awful lot of research done for us. We need an awful lot of marketing done for us. Who better than our young family that we can pay, and they have got personal allowances in their own right that they can earn. If you're paying them pocket money, give it to them so you get tax relief on it. Yes, you can. Pay your family. So you can have dividends with spouses, with partners, as long as they're shareholders in your company, but pay members of your family. It is perfectly permissible. As long as if they challenge you, that's the Inland Revenue challenge you, you can justify. This is what they do, filing. This is what they do, scanning, keeping all my information, doing my bookkeeping, doing my marketing, doing my research. There's everything they can pay. Losses we've talked about in the first year. But what other things are allowable? We heard Jem was saying you can't claim for your suit, but you can claim for the dry clean. You can claim for your suit as long as you've got your emblem. Because if you're going to be wearing your suit that's a uniform, then they will allow it as long as there's a uniform there. So, for example, the banks have got like NatWest on there. Nobody in their right mind is going to wear their NatWest emblazoned suit out there at the pub. But if it's something they wear to work, but they can wear to the pub or to a wedding or to a funeral, sorry, no tax relief allowed. But if somebody spills their red wine on it in part of your job, you are allowed to have it paid for in terms of a tax relief. You can take dry cleaning bills, perfectly allowable, within reason. Everything is within reason. So what is allowable? Anything is allowable within reason. I always say to clients, if you're not sure, ask me. If you're not sure, if you don't claim it, they haven't got a chance to say no. So anything is allowable. Some of us in this room are really clever. Some of you in this room are really clever. I won't claim any credit. But actually, you're developing apps. You're developing intellectual property. And when you're developing intellectual property, the government, God bless them, have given this thing called research and development tax credits, where they give you cash. Even if you're making a loss, they'll give you cash as recognition of the fact you're developing intellectual property. So if you are in that position, please do not waste that opportunity to ask the government to actually give you something, because they're so keen to take it away from you. So if you can get a chance to get research and development tax credits, it's incredibly easy. I'm astonished how much easier it is these days to claim it. So it's something very rarely is done. So more mundane bookkeeping, you could use spreadsheets. You could use paper. We recommend that you use a bit of software called Xero, X-E-R-O. Comes from New Zealand. They are producing so many apps every day. They're developing it. You say, I wish it could do that. And within a couple of months, they're doing it for you. So Xero actually makes you an accountant. If you're crap with receipts, use Receipt Bank. Every bit of paper, take a picture of it, scan it, throw it away. Send it to Receipt Bank. They'll collate it for you, put it into Xero for you. So use technology now there is no need for you to worry about having to have bookkeepers anymore. Technology will do it for you. Use Receipt Bank and use Xero. And you'll suddenly find it's very easy. When you pay yourself, remember now, you have to account every month that you take some money. So if you are a company, you are an employee. Not if you take a dividend, but if you take a dividend, you must give yourself a dividend voucher. If you take money, you've got to say either it's money that's repaying a loan that you've taken in, but if it's pay, you have to account for it under RTI. The Big Brother wants to know when you've taken it, how much tax they're due, and they check whether they receive it. If you miss it, you will get a penalty, a very harsh penalty. So please don't make that mistake. People think, well, it's my money. I know, but they've introduced rules, and they're changing tax returns to quarterly in 2 years' time. So you'll suddenly find that you are going to need your accountant to effectively be your bookkeeper running alongside you. The world is changing. Big Brother is looking after you. So moving on to something far more exciting about making more profit. So I'm trying to save you tax. The drivers of making more profit, the financial tips that I can give you as a speaker. Look at the drivers of sales. It's your numbers of your customers, the clients, how often they use you, and how much they spend with you. Think about it. What do you do? Our challenge is to find a way of increasing our lead generation, our ability to convert those leads, and our ability to keep those clients. I see very few businesses ever breaking down their systems like this. How much they spend depends on the price you charge and the quantity they buy. Now, I would like to introduce you to something called a speaking sales system. This is a spreadsheet that I'll show you. Anybody who would like a copy of this, it is a spreadsheet that I've designed that I use. You're more than welcome to it. I'll just show you on the screen. This is my speaker's sales success. It's the speeches system and the workshops. So basically, in this example, for example, I have got 40 customers. And each year, 30% of them will actually book me again. They're going to be inquiring of whether or not I'm prepared to work. They're going to ask me for business. And then with my marketing, I'll produce 48 leads. And so as I go down the table here, you'll see of my inquiries, I get 75% success in creating a meeting. Of those meetings, I get a 50% where they ask me for a quote. Of those quotes, I get a 40% win rate. The average fee I get is $2,000. And then when I'm doing a speech, I've got the average attendees per event is about 120, of which 25% want to buy one of my products. So if I've got this as my system to knowing this is how much people spend, this is how it works for me, what do I have to do to increase my sales? Because at the bottom, my results are, I've got sales of 20,000, I've got my costs, which are very low, and I've got my other costs, my PA, whatever, below. So I know what my profit. So if I need to make more profit, what do I have to do? Put my prices up. That's you're beating me to it, Peter. But yeah, I've got to actually alter any of these factors. So you alter a factor. So if we go to the top, go back up to the top of the page. Every one of these factors, I can get more customers, I can improve my inquiry rate, I can improve my conversion rate in terms of the number of inquiries that I can turn into meetings, I can improve my quote rate, but as Peter said, the easiest way to increase your profit is actually just to increase your price. But if you've got this, you can then work out how much profit, and you can just work backwards, as well as your workshops running alongside. Anybody who wants a copy of this, just ask me, and I'll give it to you free. I'll email it to you. It's a nice, easy way of you just analysing your business and identifying which are the areas that you could improve. So back to the slides. Okay, so pricing. We know there's loads of people prepared to do it cheaper. The biggest mistake you hear from everybody, so many expert speakers are saying, Why do you charge so little? Because if you charge so little, what does it say about you? You can't be very good. The more you charge, wow, if people are paying that, you must be very good. So in order to charge the right price, you've got to have something special about you, something unique. So I'm encouraging everybody who comes to one of my speeches is to be mad, not sad. I've got my Facebook page, Mad Not Sad, where I recognise people who are magnificent and dazzling, not satisfactory and dull like so many businesses. So as speakers, we've just got to be mad, not sad, magnificent and dazzling. Be different. Be stratospherical, whatever we want to be, but just be different. Like my man in Barbados, I just couldn't speak to you without talking about original. So remember, those of you who've heard me speak before, I was walking along at Paynes Bay, just next to Sandy Lane, and this man greeted me and took me through and telling me all about the island. And my wife said, "What have you got in your bag?" He says, "Pineapples. Is that what you sell?" Oh, no, I don't sell pineapples. People buy pineapples from me. My friend's wife said, "What do these cost?" This is the quickest version. "What do these cost?" Say, $200. What? $200? They made of gold? He says, gold. He says, they're a work of art. They're golden, they're delicious. They're an amazing experience. You wait till you try that experience. So as we go along, he hadn't tried to sell us anything. What's your name? My name is Original, rolling R's. I am the original pineapple man from Barbados. 4 days later, he said, "How's your holiday going? When would you like to try the experience?" I said, "I'm playing golf tomorrow. How about the next day? I'll find you." So sure enough, he finds us. And he starts around, he gets out a knife from his sheath. And he gets out his pineapple, and he gets out a plastic bag, and he holds the pineapple by its feathers and starts peeling it like an apple. As he's singing away, he says, "Pineapples are great for your chest. They help you to digest." He says, "I'm a poet." It's absolutely fantastic. Everybody's gathering around. The audience is there. And in the end, he grabs hold of the fruit, whoosh, with a flourish, takes off the feathers, 6 of us, cuts them into 6 squares in the pineapple, hasn't held it there, hasn't held with his hands, and he says, "This is great with Barbados rum." And so he says, "I recommend it to you." Everybody applauds. And I sit down and I said, "Gosh, what have I forgotten? What do you want from this original?" He says, "Mike, I've come to think of you as a friend. Shall we call it 100? I said, "Original, I've come to think of you as a friend." And I take out a $20 note and stretch across the table. He takes a $20 note, with a glint in his eye, shakes my hand. He says, "Mike, nice doing business with you." Have I been had? Everybody applauding. I thought, have I been had? No. I willingly gave a man $20 for a pineapple that he's probably taken from somebody's garden. I want you to understand it is not the price that matters. It is the experience of dealing with you that matters. So that price is not a factor. They will talk about you around the world like I talk about Original around the world. And I went back, and he has been adopted by the chairman of Middlesbrough, who said, "Original, I want you to have something smarter." So he's given him a Middlesbrough shirt for the Pineapple Man. So this March, we met on Paynes Bay, and he had another $20 off me. What I wish is the most important financial tip I can give you after having to try and save you a bit of tax is that you charge the price that you're worth. And in order to charge the price that you're worth, to make the profits that you deserve, please, please, be mad, not sad. Be something special that people will talk about you around the world so you can charge the price that you deserve. And marketing will be no cost at all to you because everybody will do your marketing for you. Thanks very much.